Happy Friday.
Happy Friday, Paul.
What a
Welcome,
week.
welcome to the playoffs edition of the
Yeah.
Nienow and Tierney podcast.
So anybody listening or watching, actually anybody listening may not realize that we've got our football jerseys on as our teams are going to have a big rivalry game tomorrow.
Yes, both teams, Rams, Seahawks, round three. Both teams have won round one, and we'll see who moves on after this game.
Yeah, the rubber match. I don't have. Well, I know I should be the like, oh, we're going to kick your butt kind of guy, but it all depends on what happens with Jared Goff if he comes back. Not that he's been like this amazing quarterback, but in some of the games he really has. I mean, he's got some pretty astounding numbers, and then in some of the games it's like, he's pedestrian at best. But if he comes back, they have a chance, because the one thing the Rams have is a great defense. The Seahawks defense has been coming back, but the Rams seem to be the team that has Russell Wilson figured out. I think that's probably too generous, but at least can contain him, because he is the X factor for sure.
Yeah, so Jared Goff is a wild card. Do they think he's going to play?
Yeah.
Oh, they do. Okay.
Yeah.
Okay. Yeah, I mean, it is true. I mean, it's funny how different teams have your number. Like the Rams always have our number. The 49ers have the Rams number.
Yeah.
For sure. And
it's funny because when I was a kid,
yeah,
it was during that 49ers, dynasty period, and the Rams always they stunk, and somehow they always pulled out games against the 49ers back then. Somehow they were like this miracle, like the Jets beating the Rams this year kind of a thing. I don't know why, though. Lately, the 49ers definitely have the Rams number.
And it's funny, you talk about not being the guy. I mean, yeah, I am definitely not the guy that would ever say that we're going to kick your butt. I would never do that, because every time the one time I try it always comes back to bite me.
Yeah.
The other thing that's interesting this year, and then we can move on, but is, there's no fans in the stands. So there's really no home field advantage. And in fact, I think road teams are 500 this year across the NFL. So clearly no advantage of playing in Seattle. So
interesting.
Yeah.
Well, interesting week. The interesting week on a lot of fronts, but I think impact to our clients is the results of that Georgia election. I don't know when it was we first started talking about after the presidential election. It seemed like Georgia was the experts or the pundits seemed to think that Georgia would go Republican. So it didn't really seem like taxes would be a big consequence of the presidential election change. But here we are, and the Senate's going to be 50-50 with a majority vote based on the vice president who gets to vote in the Senate.
Yeah. Paul, when did you call Georgia for the Democrats?
I got to say, I was trying to avoid the news and the media this week as much as possible. I hate to be the bury your head in the sand guy, but I was. And at the same time, you couldn't avoid anything. But anyways, I wasn't watching Georgia on pins and needles. I woke up the next day and learned about it.
Yeah. Yeah.
So with that being said, it seems like, this is whether there's a law passed in 2021 or it takes a little while to formulate this. It is going to happen. I would predict at some point here. So, we did talk about it in our year-end client call, and that's, if any of our clients want to, hear the details of what the Biden tax plan is, they probably ought to go back to that. But the real big picture overview that our clients ought to start thinking about is an increase in the top tax rate. So Biden basically said, he's going to increase taxes on anybody earning over $400,000 a year.
Yeah.
So increase in tax rates, both, I think, capital gains rates, possibly, certainly over $1 million, he said.
Yeah.
But then ordinary income tax rates for anybody over $400,000, basically going up from 36% to 39.6%.
Yeah. Corporate tax rates would go from 21% up to 28%, I believe.
Yeah. And then the other big picture thing that I see of more urgency for clients who are high net worth clients is the estate taxes. The reduction of the current, I don't know the exact number at the moment, but it's around $11.5 million per person gift and estate tax exemption. And certainly that going back down is something that taxpayers can potentially act on now to gift and get those assets out of their estate while they still can at those high amounts.
Right. Yeah. That is a big deal for sure. So it'll be really interested to see how quickly they can move on legislation to reduce that estate tax amount. I was just chatting with, or heard someone say that, with Trump, becoming president in 2016, yet he didn't pass the Tax Cuts and Jobs Act until the end of 2017. And so it could potentially take a year or more for any tax legislation to get passed.
Yeah. I got an email today from an attorney who was advising one of my clients and saying, hey, it is possible that estate tax exemption change could be made, and it could be made effective January 1st, 2021. I don't see that happening, but I don't know how much my prediction is worth on this.
Yeah.
And so, yeah, you're right. It takes a while, especially when there's such a narrow margin. Right. When it's 50-50 in the Senate, even people who are on the same team are gonna want to negotiate for their piece of the pie, and their special projects and things like that. But with that being said, the one thing I'll point out that I think is a little different is the Trump tax cut, the Tax Cut and Jobs Act of 2017. That was a major change in tax policy. So we never had this qualified business income deduction that was part of that, and this flat corporate tax rate. I don't remember those things at all. Whereas the Biden plan is significantly just a rollback.
Yeah.
So it might be easier for them to just do this rollback than it is a big change. If you remember the Healthcare Act, the Obamacare, I don't remember the name of the act, but that took a long time because it was brand new. It was a new concept. They had to project things out, figure out how this would work, how they're going to administer it. Right. Whereas a rollback to how things used to be is pretty easy. In fact, we saw that stuff happen with George W. Bush when he took over from Clinton. So, and
yet the Republicans were never able to roll back the ACA fully. I mean, they did parts of it, but it never did. So it will be interesting. My question actually to you would be, I'm assuming the farther we get down the road and no tax legislation has happened, it'd be harder and harder for them to do it retroactive back to January 1st, wouldn't it?
Yeah, I think it's hard, period. I think, if I remember correctly, the only times I've seen retroactive things like that are when they were extenders. So like, the ability to make a charitable contribution distribution out of an IRA, those things like expire because Congress doesn't take action. And then maybe a quarter of the way through the year, they decide to go ahead and extend that, and they do it retroactively. Yeah. I've rarely seen big changes. It's just hard to change the rules of the game back after half of the game has been done,
Right. And I think you run the risk of it being declared unconstitutional, I think, too.
Right. So it'd be as if in the Rams and the Seahawks game, there is a pass interference rule and they are, they throw a flag and they do a video replay. And in the video replay, they go, yeah, that was pass interference, but we're going to change the rule to say that it's okay for you to not be looking at the pass and block the guy, and therefore it's not pass interference.
Well, I think I would caution you, because while there may be a football rule, there is a baseball rule where you can play the game under protest, where you essentially play the game, and then you could actually have it rolled back and say, oh, you know what, George Brett, that home run doesn't count because of pine tar or whatnot. So,
all right. So how can we do a sports analogy to Prop 19? I think we ought to talk about Prop 19. This was something that I wasn't, I knew that passed, and yet I hadn't quite thought through how this was potentially going to impact our clients.
Yeah, so Prop 19 passed. Under the old rules, you could, and you're going to have to correct me here, but you could pass on real property from parent to child, and there was no reassessment that was done. You could do it on principal residence. Could you do it on rentals as well?
So your principal residence, you could just pass it on, no reassessment. On non-residence properties, there was, you could pass on $1 million worth without reassessment.
Okay, yes, okay. So now under Prop 19, you could still pass your residence with some limitations, but there is no such thing as, you cannot pass non-personal residence property without a reassessment.
Well, actually, it's they moved that $1 million from the non-residence property to the residence property, right? So if you pass on your principal residence, you die, your child inherits it. Now you can only pass on $1 million of increased value without reassessment. Number one, and number two, the child has to use the home as their principal residence. That rule wasn't around.
Right. Before. So there is no such thing as passing on non-personal residence, I guess.
I believe so. Yeah.
Okay.
That's right.
Right. So the rule is that you have $1 million worth of essentially increased assessed value before there is a reassessment. So like an example I saw was, you've got a property that's assessed at $500,000. It's now worth $1.2 million. So if you take the $1 million or the $500,000 of assessed value, add $1 million of fair market value increase on that, since that's $1.5 million, and the property is only worth 1.25, no reassessment on that. The beneficiary takes that property at the $500,000 pre-assessed value.
Yeah, that's right. Yeah, the simplified way of stating it is they're only going to let $1 million escape without reassessment.
That's right. Yep.
And only on a principal residence, and only if you use that property as your principal residence.
That's right. And then I think the other part of this is that a individual over the age of 55 or somebody with there's a declared disaster, they can actually roll their assessment 3 times over their lifetime, and there is no reassessed value on it. It can actually increase in value too, which was interesting. And you're just assessed an increased assessment on the amount of the increase, I guess, over the sales price.
Yeah, those property tax rules are always difficult. I especially when I get tricky questions from clients who maybe have real estate in like a family limited partnership, or even just a partnership that owns real estate, and they're thinking about selling their partnership interest. Okay, at what point does this reassess? I always refer them to an expert who only practices in those areas when it gets tricky like that.
Right. Yeah, sure.
In fact, as you know, the partnership tax returns, the California partnership tax returns ask specific questions about changes in ownership of entities that have real property. So we know that the state's looking out for those opportunities to reassess properties.
Yeah, definitely. For sure.
Anyways, that Prop 19 is a big change, and something to be considered for sure. And frankly, if we have clients who are going to do gifting in response to the potential change in the estate tax exemption,
Yep.
it's even more efficient to consider, rental property instead of residential property. To just preserve one of the properties that could be allowed this $1 million of exemption.
Yeah, I wrote that down because I was gonna forget that, but you mentioned it, which was, you need to almost decide like which property you're gonna keep, like is the beneficiary gonna keep before you do your gifting, because of the huge impact it could have on the estate taxes and the property tax reassessment. I mean, there's almost like this full, you got to evaluate it all. So.
Yeah. So it just felt like, for us, 2020 felt like the year of changes in the rules that I never could have imagined seeing. All of the things in response to COVID, and it just feels like, oh man, are we going to be in store for another year like that coming up here in 2021? So
I mean, I think I
not.
messaged you this earlier, which is, I mean, is there another job that you could have where the rules change like every year, whether the limits go up or down? And, if we spent so much time figuring out the QBI deduction, I mean, we spent a ton of time figuring that out. And if that gets rolled back and that gets eliminated, I mean, it's like, okay, yeah, we had this like 3-year run on that, and then just forget it because you'll never have to deal with that again. It's kind of wild.
Yeah, I agree. I guess the only other profession that maybe has to deal with rule changes like that every year, football players.
There we go. We'll end on that.
All right, see ya.
All right, bye.